Now, in the last year or so, lots of dividend investors, including myself, have been a little bit less interested in the JP Morgan Nasdaq Equity Premium Income ETF JEPQ for several reasons. Some of the reasons being that the payouts that JEPQ offers are sort of sporadic, some months being as high as over 60 cents per share, and some months low as being 40 cents per share. Also, the fact that JEPQ only offers a 10%, 11% yield, where other Nasdaq 100 high income ETFs might offer a lot more income generation from day one. But it's not only that, investors are also realizing that JEPQ's income might not be taxed as favorably as other high-income ETFs across the market these days that also offer very similar exposure. Not to mention, if you stacked up JEPQ next to two competitors, GPIQ and QQQY, on the max time frame, JEPQ is underperforming both them by quite a margin. But I did just as of recently come across some new information which makes JEPQ look a little bit better than what I might have thought in the past, so I want to share with you guys what I uncovered. All to say that if you hold on to this one, or maybe you've ever thought about it, definitely stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So I came across this article from SeekingAlpha.com. It says JEPQ, I was wrong. The yield is worth it, rating upgrade, and this is by AJ Button. I started reading it and definitely saw some insightful information, so I figured I'd make a video on it. It says summary: the last time I covered JP Morgan's Nasdaq Equity Premium Income ETF, I rated it a hold. At the time, I thought its yield didn't make up for its lost gains. But after thinking more about it, I realized at today's nosebleed valuation, hedging the Qs with covered calls might make sense. At the same time, the hedging benefits are less than could be had with long puts, so the fund is best for those with high income needs. JEPQ's structure benefits from JP Morgan's disciplined approach, aiming to deliver consistent returns for investors. Given these strengths, I believe JEPQ is a compelling choice for income-focused investors' portfolios. They then said, when I last covered JP Morgan's Nasdaq Equity Premium Income ETF, JEPQ, I rated the fund a hold on the grounds that its high yield was not enough to make up for the lost potential of capital gains. My reasonings would have been sound in normal market circumstances when you expect future gains. Covered calls do hold back returns if things play out. What I hadn't accounted for, though, were the conditions in the present market. Today, the Nasdaq 100 index trades at 42 times earnings and 17.3 times book, according to Investco, the operator of the world's most popular Nasdaq 100-based fund. This is an extremely steep valuation, ignoring potential growth. The keywords there being ignoring growth potential. With the Nasdaq 100, growth is not something you want to ignore. The index's constituents have historically seen high top-line growth, and said growth will probably remain high if the current level of demand for AI services lasts long-term. There is technically a possibility for new competitors flooding the market and driving down margins. However, non-semiconductor AI margins are already negative if you isolate AI investments from overall company performance. Incumbent companies are better to survive this than small players are. Current signs indicate that companies already in the Nasdaq 100 are likely to run away with the AI markets. So Nasdaq 100 is a high growth index, and there is a plausible reason to think that growth will continue. At the same time, the multiples the index currently trades at are the second highest in history after the dot-com bubble. You've got one sign telling you the index is overvalued, and another one saying it's not overvalued if current trends persist, like they easily could. What is an investor to do here? They then said, faced with this uncertainty, hedged exposure to the Nasdaq 100 is probably ideal, and this is where a fund like JEPQ can come in handy. JEPQ's covered call index provides a significant buffer against downside in the Nasdaq 100 index while still offering some of its upside, viewed solely as a hedging strategy. Covered calls are less effective than long puts, but for investors who value both income and protection, they can be ideal. Also, they end up being the optimal sort of hedge in a sideways market where they can generate income despite there being no upside to cap. So when you consider the Nasdaq 100's high historical growth and future growth potential, it's hard to imagine the index simply collapsing like the 2000s. Growth and profitability are both higher now, while the index PE ratio is lower. However, you could imagine a moderately severe bear market or a sideways market, given the index's multiples are still very high. Viewed in this light, JEPQ has a definite place in an investor's portfolio. They then go on to talk about JEPQ's top portfolio components, being long positions in very powerful names like Nvidia, Microsoft, Apple, Amazon, Broadcom, and Alphabet. They then go over JEPQ's income potential, which a lot of you guys are definitely fond of. According to Seeking Alpha's quant, JEPQ has an 11% distribution rate. That is many folds higher than that of the NASDAQ 100 index. If held in a 401k, those distributions are of course tax-free. But are JEPQ's distributions likely to hold up long term? My inclination is that they probably will. First, income stability is one of the primary goals of JEPQ's portfolio managers. There are many tools fund managers can use to achieve this aim, such as creating distribution reserves with accumulated dividends and option premiums and using it to fund a relatively stable distribution over the course of the year, which I've seen many different funds play this out. Second, though, the NASDAQ 100 index tends to be volatile. As I wrote earlier, the index current nosebleed valuation argues that the volatility will, if anything, increase, so there is a good chance JEPQ's management will be able to collect high premiums and pass them into investors in the form of distributions. As far as JEPQ's covered call strategy goes, it's a pretty typical one using individual calls. It does not use swaps or unorthodox instruments to achieve the effect of the typical covered call. That makes this strategy relatively straightforward and not necessarily advanced tax planning. JEPQ's hedging benefits, in addition to it being desirable in itself, portfolio income generated from calls serve as a hedge against downside. With an 11% yield, JEPQ would spare the investor the loss of wealth resulting from a price decline of the same size. This kind of hedge isn't foolproof though. Unlike long protected puts, covered calls don't offer any further protection if the price decline exceeds the yield. However, if you think the downside risk to the Qs right now is moderate size rather than large, as the author says, JEPQ's yield does offer a decent buffer. Now lastly, the bottom line. The bottom line for JEPQ is that it's a professionally managed fund with high quality holdings, a high and seemingly sustainable yield, and very competent management. While I haven't re-announced everything I wrote in my last article, I now think JEPQ is a buy. So very good article, AJ, shout out to you. I did want to share the article with you guys because it's been sort of a while until the last time I've seen anyone really talk bullish of JEPQ, to be honest. I still think, all things considered, from my personal portfolio, JEPQ is still worth holding on to, although I'm still much more bullish long term on names like QQQY and GPIQ just because of how these ETFs are built, what they offer, etc. Now lastly, before I go into a question for you guys down below, are you bullish or bearish on JEPQ in 2025? Are you holding? Are you buying? Are you selling? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.